What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner, and it is Monday. I hope you guys are doing well. Hope your week is getting off to a good start. Ours is over here. I'm in Bitcoin and Markets land. Bitcoin Fundamentals Report comes out every Monday. If you're not subscribed, go to bitcoinandmarkets.com and subscribe. Then I come through and I live stream, reading through it, going on tangents, talking about all these topics. But let's just dive right into it. So we have bitcoinandmarkets.com. That's where you go to sign up for the free newsletter. I also have paid newsletter, different tiers of membership over there on the website. So check that out. Also, hey guys, on Rumble and YouTube, like, comment, subscribe. I will check the comments a little bit later. And Telegram, put the comments in the post, the live stream post. If you guys want to check out the community over on Telegram, it's t.me/Bitcoin and Markets. But okay, bitcoinandmarkets.com, fundamentals report number 275. Let's get into it. All right. Always start off with a meme. This was an amazing meme. So J.K. Rowling, of course, Harry Potter fame, she said, "Hey, I don't understand Bitcoin. Please explain it to me." And Brady just had a amazing response to this. So Voldemort, if I'm saying that correctly, is central banking, and Harry is Bitcoin. This is just cuts through, to another type of person, and it's just so simple and elegant, and I thought it was great. So good job, Brady. That is the meme for the week. Okay, snapshot of Bitcoin. Weekly trend is bullish. Media sentiment is positive, not very positive, because there is starting to build some FUD around the halving and mining, like miners will go bankrupt. We'll cover one of those articles that came out this week. And the price is still not above that 49,000 that we hit on the launch of the ETF. So there is a little bit of negativity built into the headlines. Network traffic is moderate, even though the mempool is still high, and we'll go over that down below in the mining section. Oh, before I keep going on this, guys that are new watching this, I break out my report into all the different sectors of Bitcoin. So we talk about headlines of Bitcoin and macro, because Bitcoin is part of this larger macro environment, as well as this being Bitcoin and markets and being an economist and stuff. That's my wheelhouse. And then we talk about price. We talk about mining sector, mining news, all the stats from the network, like mempool and fees and hash rate and all that stuff. And then when there's big news for layer 2, we'll cover layer 2 as well. There wasn't one for this week, so I didn't include that section. Okay, let's keep going. Mining sector is surging. Days until halving, we are now under 80 days, 79 days. Are you guys ready? Are you ready for the halving? This is something unique to Bitcoin, and it's just amazing. I remember all the halvings that I've been a part of. Okay, price this week at time of writing was 43,040. We'll take a look at the live chart when we get to the price section. That was up just over $2,500 or 6.2%. Market cap, 845 billion. Satoshis per dollar, 23.24. And one finny is $4.30. In the mining sector here, we had the previous difficulty adjustment, and I still did not change that to red. Oh my gosh. I'm going to go live and update that. Sorry guys, stand by. I can't take it. I forgot to update it last week, and then I didn't update it again this week, so I got to fix that. All right. Where are we at? All right, update. And refresh. Let's see if that made it red. There we go. It went down 3.9% on the last difficulty adjustment. And last week, it was estimated to be about a 0% adjustment for this coming difficulty adjustment. But hash rate has just exploded. So it is estimated to be a positive 7% in the next 3 days. We'll have a difficulty adjustment. Okay, mempool still over 500 megabytes at the time that I pulled this data, but fees are relatively benign. $2.41 or 40 sats per virtual byte. A low priority fee is still coming in under $2, so that is pretty good. Lightning Network. Now, this did not get updated this week because um, mempool.space, where I pull this lightning data from, their lightning numbers are not updating. So as soon as they get that fixed, or if they don't get that fixed by maybe next week, I'll look for a new source for that. But yeah, these are old numbers, so we will skip that for this week. In case you missed it, this is all of my content for the last week. We have a Chinese stock market bailout is good for Bitcoin. That was the paid member version here on bitcoinandmarkets.com. Did not get a podcast out, blog post. The most recent one is this business cycle post. You can check that out. And Bitcoin Magazine Pro, China emerging as surprise source of Bitcoin demand. So there is a lot of, the last week was a lot of China news for me, and talking about how Bitcoin or how China is going to be a big player in the coming Bitcoin demand surge that we're going to see. So you can check that out. This Bitcoin Magazine Pro is bmpro.substack.com. All right, let's dive into the headlines. So ETF update. What I did here was I just gave a few different types of measurements for these flows here. So this first one you can see is from, BitMEX Research. And the far right column shows total flows. So far, it's plus 759 million after last Friday. You can see that right up here. Let me make it bigger. 759 million. Of course, GBTC is all outflows. But if you look here from the 22nd of January through Friday, so all of last week, they were decreasing 600, 500, 400, 300, 200. We'll have to see if we get into the 100 million for today. But positive 14 million on Friday, which isn't a ton, right? But hey, it's positive. Okay, next up is flows. And I get this from Capital 15C on Twitter. You guys should follow them if you're not. They do good work. But here they have the flow in Bitcoin. And so far we are plus 17,571. BlackRock has broken the 50,000 Bitcoin mark, and Fidelity is close behind. And you can see here, Grayscale is negative 122, but BlackRock is positive 52, Fidelity at 46. Let's see, ARC at 14, Bitwise at 13. So there's a lot of positive numbers here, and total positive is 17,000. If you don't consider GBTC outflows, it's 140,000. So that is huge, in my opinion. Okay, so that was that. Lastly, here's an interesting graph by Alex Auto Bitcoin, or Auto BTC on Twitter. It is a simple representation of the flows by day above and below zero. The blue is GBTC outflows. You can plainly see the decreasing sell pressure from GBTC. Okay, there we go. I'd add, this is a good visual to understand the slow data reporting problem. While data has become more consistently reported after each trading day, we do not know if that data represents all current up-to-the-minute data. The T+1 or T+2 lags are frustrating. So here you go. The green is the net inflows for that day, and the red is the net outflows. And then the blue is the GBTC outflows. So let's take January 24th. GBTC outflows looks like we're about 400 million, but net outflows was only about 120 million for that day. So this is a good representation of this, but we don't know what dollar of trading belongs on what day. You know, they are getting better at, I don't know what time they drop, 5 or 6 p.m. Eastern time after trading has closed. These ETFs are dropping their data for that day. but they have T+1 or T+2 to do a lot of this stuff. So we don't know if this volume is supposed to be on day, uh, January 19th, or maybe it's from January 17th. And we don't know where all the different buying and selling is happening. And we do get a little bit better idea from the blockchain analysis. So we can watch the Bitcoin go from um, a custodial account with Coinbase to the OTC desk or vice versa. But that still doesn't tell us exactly when the trade happened that required that money to be moved because of this T+1 and T+2. So they might not even settle on the blockchain until T+2. When did that happen? When did those trades happen? We can't really tell perfectly because there's just we can tell much better in Bitcoin versus any other TradFi ETF, but we still don't know perfectly to the day. So if you're trying to trade on daily flows, you're just trading on like incomplete numbers. You're completely fickle headline trading. And that is, I don't think, a very smart way to go about it. Overall, there's been a slight positive uptake of these things. And, if you net it out with GBTC outflows, I don't think I take that back. The FTX receivership, they sold and they didn't buy new ETFs, right? They just sold their existing shares, and that was over a billion worth of GBTC. But a lot of GBTC is being sold to go directly into the other ETFs because of the lower fee structure. So, there's a lot of analysis that has to happen about this, and we don't know exactly what's going on with the flows. Okay. That's what I talk about here. Bitwise ETF publishes their Bitcoin address. Now, this is something only with Bitcoin. Bitcoin it's so new to these TradFi people that this is something that you wouldn't even think about. Like a gold ETF, how can they trustlessly give an audit, proof of reserves? They can't. It wouldn't even cross their mind to think about that. So this is something only in Bitcoin. But anyway, so Bitwise, they announced that they are the first Bitcoin ETF took it off that. To publish a Bitcoin address of its holdings. Now anyone can verify their ETF holdings and flows directly on the blockchain, but not T+1 or T+2. What's the up to the minute levels? They still can't verify that. They can just know that this is their address, and as of this day, it was 100% or even over collateralized, right? Because we'll talk about that in here in a second. On-chain transparency is core to Bitcoin's ethos. So yeah, I think this is great. Then what happened was some people started sending small transactions to this address. Someone said a 6969 transaction to this address. And so that it's like a tip, but what happens with that Bitcoin? My immediate thought was, does this raise NAV? Because they're over collateralized. They have more Bitcoin than they should to their shares, right? Well, Hong Kim, CTO of Bitwise, he came out in this tweet here, and he said the following. So in the past 2 days, our Bitcoin ETF received 999,000 sats, or approximately $400 across 35 UTXOs. It's negligible compared to the AMU. Of course it is. But those sats are added to NAV and accrue to the benefit of shareholders. If any sats are sent to us from OFAC sanctioned addresses, Coinbase custody will flag it, and those UTXOs will be left untouched and not be added to NAV. Handling dust transactions isn't that hard for an institutional custodian, and the framing that you can attack a public Bitcoin address by sending it free sats doesn't hold truth. So these guys are on top of it. They know what's going on. Because my first question was, how does it affect NAV? And my second question was, How are they going to deal with OFAC sanctioned addresses? He answered that both in the same tweet. So, very, very interesting. This is something that all these ETFs should do and are likely to do, maybe not right away, but give them a year or two, and it probably will become standard practice. Okay. At least for the Bitcoin ETFs. Like I said, they can't do this for other ETFs. Like, think about this. In a year or two, and there's this hyper competition going on. Maybe there's 15 Bitcoin ETFs, different types of products, and derivatives on top of those ETFs, like shorts and stuff like that. It's going to be very important to prove that you're fully backed. And uh, because that's just going to be one more thing on top that sets your ETF apart from other ETFs, which makes you less risky and all that. I mean, there's always conspiracy theories about unbacked ETFs. Of course, that's the big one in the gold community, but I'm sure there's other um, people out there that think ETFs are unbacked. And I'm not saying they're all perfectly run, but this is something that Bitcoin can do. And these ETFs, if they want to set themselves apart, they can do this. So that's probably going to drive people into having public Bitcoin addresses. Another kind of a following on from this, like what happens when governments start to um, hold Bitcoin and they will publish their public addresses? Maybe departments within a government, so that the people can see the budget, the people can see where their money is going. It should be pretty simple to publish that, right? There might be some, and you would be able to follow the money as well. Like you could follow the money to the government contractors. Like how much money is going to Boeing and Lockheed Martin? The Defense Department loses trillions of dollars. So like or misplaces trillions of dollars. How much is going to Lockheed Martin for some secret project? How much is the CIA spending over there in the Middle East in their covert operations? They probably wouldn't want to publish that, but the we could have a little bit better check on the government, and I don't know if that's going to come. I think that will be very popular, and it probably will happen sometime in the future, whether that's 50 years from now or something like that. But I do think that there's going to be at least some parts of the government that publish public Bitcoin addresses. And the central bank should definitely do that if they hold Bitcoin to back their currencies, which I am in the belief that that is going to happen in the future. So the central bank will almost surely publish their Bitcoin address, just like Bitwise is doing. So, anyway, very interesting. Let's go on. So, more about Bitcoin here. Bitcoin headlines: bruised by stock market, Chinese rush into banned Bitcoin. And here is the image from Reuters. I talked about this last week. And I wrote about it on Bitcoin Magazine Pro and in the Market Protons, but from different angles, a little bit different. The bottom line is that the Chinese economy is in a multi-stage collapse. I had a typo there. 1 second. Sorry, my kids are coming in and out, and neighbors are coming over, dogs barking. Okay, let's get back into this. So the Chinese economy is in a multi-stage collapse. Right now, it is the stock market's turn to be hit hard. Young people or investors of all ages are looking at the stock market returns of the last decade and want an alternative. Bitcoin is increasingly becoming a way out for them. Hong Kong is opening up rapidly to Bitcoin, and money is flowing there from the mainland. This is a pile of tinder waiting for a match. Yes, there are flows going into Bitcoin from these types of Chinese investors, but once the Bitcoin price starts to take off, FOMO in China will also kick in. And remember, I talk about this not well, kind of often about how Bitcoin is a Veblen good, and as price goes up, demand goes up, FOMO kicks in, and to um, there's no way to fight that rising demand by increasing supply. It actually works the opposite. More circulating supply in the initial phases of a bull market comes off or out of circulation. So supply is actually contracting as demand is starting to pick up. And that is a recipe for very rapid price movements. Um, it goes the other way as well. People will scale out of their positions, or at least part of their positions. A lot of people do. I recommend buying and holding for at least 5 years and see where it is and learn as much as you can. Don't, only invest in Bitcoin how much understand about it and about it, because you don't want to feel overexposed in when Bitcoin has pullbacks. But anyways, once the Chinese investors, they see Bitcoin starting to move, they see their stock market underperforming, they see opening up in Hong Kong to Bitcoin ETFs and Bitcoin investments, then I think there's going to be a huge flow of demand coming from China. All right, let's get into the macro headlines. Border Patrol says agents will not remove Texas razor wire barriers. And we've been talking about this a lot, and there's a lot out there in the mainstream media. This one that I linked to is specifically from Zero Hedge. This is what I think about this. Okay, the standoff at the U.S. southern border is a significant political event. However, I'm generally less concerned with the escalation than other people. The proper context in which to view the situation is as a further incentive. Oh man, I messed that typo up big time. Is as a further incentive to turn inwards for the US instead of maintaining the liberal world order and globalization. I was also on Twitter earlier and mentioned something. Let me see if I can pull that up because someone had a comment, a response, and it was a good one. 1 second. Okay. Share this tab. So, Lindsey Graham is out there trying to stoke World War III. And I say the war hawks will lose. U.S. is turning isolationist. They want desperately to drag us into another long-term war. So we won't turn inward and fix our own house or fix our own problems. And this guy, Nat Robbins, he says, I don't understand why we can't persuade our allies to help us flatten the Houthis because they can't afford it. These guys have been 50 years of being in the US's shadow, being in NATO, letting the US do this. I mean, if you look at the size of navies, it is like the US has 95% of the world's navy. It's crazy. I mean, unless you count like Chinese merchant fishing boats that they can requisition for their merchant marine and stuff. That not counting that, like we're talking actual naval vessels, then the US has like 95% of the firepower, 95% of the doctrine, 95% of command and control of everything. So they can't help out. This is exposing these people as being very impotent to helping out, support the world order. And if the US is going to turn inward, who else is going to support the world order? That 5%? No way. It's going to collapse in on itself. All right. Getting back to this. Immigration is a losing issue for Biden. He can't risk alienating the inner city vote by publicly removing the razor wire. Instead, the response has been akin to foreign policy sanctions, with the administration refusing licenses to Houston natural gas exporters. Logically, the domestic price of natural gas has crashed, gapping 17% lower on open. And here's the chart of that. I mean, just crashed. Actually, let's go to a live chart, see where's that where that is now. Here we go. Let me take off these and share this. So here is the live chart. Not much difference, but if we go from close yesterday to where it's going to close today, it's a 20% drawdown on the domestic price, US Henry Hub price of natural gas just crashed through the floor because we can't export it. So we're going to have a glut here. And then the Europeans are going to have a shortage. I mean, it's good. It might take obviously a couple weeks for all of those tankers en route, because it's not like instantly they're going to feel it, but the futures is definitely going to take off here in Europe. Let's take a look at what the Dutch. Okay, so it's not registering yet in the Dutch natural gas futures, but it is up off the lows just a little. Let's see. If you take yesterday and today, it's up about 9%. So, I mean, that's still significant. All right, let's get back to the report. And I say, okay, so the globalist allies in Europe who have turned to U.S. natural gas because of sanctions on Russia and blowing up Nord Stream. It is an interesting move by the administration, but will ultimately lead to increased globalist tensions and more pressure to disintegrate that global integration. I have typos in here. Sorry, guys. Okay, let's move on to China and Evergrande. Ordered to liquidate in landmark moment for crisis hit sector. And let's see, where is this taking you to? Reuters is where I am quoting this from. A Hong Kong court on Monday ordered the liquidation of property giant China Evergrande Group, dealing a fresh blow to confidence in the country's fragile property sector as policymakers step up efforts to contain a deepening crisis. The attention has moved to the stock market, though. I mean, it was centered around the real estate market until I would say middle of last year. Then it has rolled over into this stock market crisis. They've, they came out last year, middle of the year, with it was about $120 billion stimulus package. But where was that being invested? Infrastructure. It was always going to infrastructure. That's how China has built up China, right? Just overbuild their infrastructure. Well, they're so overbuilt over there. 100 billion doesn't go very far. So now, this time, with the stock market crashing, they are going in a $200 billion rescue package, but it's going to go directly into their stock market. So it'll be interesting to see how that works out. But okay, let's continue. The decision sets the stage for what is expected to be a drawn out and complicated process with potential political considerations as investors watch whether the Chinese courts will recognize Hong Kong's ruling, given the many authorities involved. Offshore investors will be focused on how Chinese authorities treat foreign creditors when a company fails. So yeah, they have a possibility that they make some bad precedent here about how they are treating the foreign creditors when all these companies are going to go under. And there are going to be a lot of companies going under in China. All right, let's take a look at this kind of graphic here from Reuters. Property sales by floor area. You can see the last 2 years have just been atrocious, but it's a trend, okay? And this trend has been going on for 2 decades already. This is the natural end to this economic bubble that happened in China. And it's not like out of the blue. It's been getting worse and worse. This is property investment. You can see 2 years around negative 10%. And funds raised by developers. I mean, this is not sustainable, people, especially when they have trillions of dollars worth of bad debt and they can't even raise money. So, yeah. Okay. I talk a lot about China, but you guys get that one. Next topic here is peak cheap oil is getting 15 minutes of reflection. So if you guys are new to my content, I am a peak oil demand person. I think that the global economy is in a giant global credit bubble that's been lasting, going on 75 years. We're kind of unwinding that now. So the overriding pressure is towards deflation, less economic activity, less growth, less inflation. And so there's going to be less marginal demand changes for oil. We're going to have increased technology to get oil more cheaply out of the ground. Um, have more efficient uses of that oil, miles per gallon and all that stuff, they're going up. So the overall demand relative to supply for oil has peaked, I think, or it's peaking right now, roughly. And that so the long-term trend for the price of oil is down. Now that's completely opposite of what this peak cheap oil is. They think that oil is the cheap available stuff is gone, and the US is the supply from the US is going to taper off dramatically over the next 2-3 years, even. So we're going to go into this huge supply shortage in oil. Of course, that means price will go up. But anyway, I want to watch this live. Doomberg, who I guess he wrote a piece just recently, like 2 or 3 weeks ago, on this peak cheap oil, debunking it. So he and I think, are kind of seeing mostly eye to eye here. But they have a debate with this guy who's saying that no, oil prices are going to $200 a barrel. And how often do we hear that? Okay, so what do I say about this? I've debunked this in the past. Recently, Doomberg did a takedown of this idea. I'm not a subscriber of Doomberg, but I like his podcast appearances. My position differs in important ways, and I'll be doing a podcast on that in the future. Here he is debating an alarmist over cheap oil. The alarmist is a dangerous linear thinker. A broken clock is right twice a day, but the peak cheap oil guys will almost always be wrong unless they extrapolate from, okay, sorry guys, my typos are pretty bad this week, but so what they do, their problem is they take a very small sliver of data and a small sliver of analysis, and they extrapolate that based on certain assumptions. And then they follow that to disaster. That's what the peak cheap oil people are. They're linear thinkers that are extrapolating on their assumptions. And I think it's funny. Most of the time they're like, oh, we got to look at the data. We got to look at the data. Look at the data. Look at the data. And then you say, well, I'm looking at the data and oil reserves go up every year. The price of oil is relatively timid right now. And demand is pretty close to all-time highs. So yeah, let's look at the data. It's going to be that way for as long as we can see out in the future. But anyways, okay, that's enough about peak cheap oil. I will be doing a podcast episode about that here in the near future. Let's get into the Bitcoin chart. So last week I said price dipped below the 50-day moving average, just like it did in June and August. But back then it back tested the 50-day moving average. We should expect at least a back test of the 50-day moving average, but with a higher chance to continue higher this time due to ETF inflows. That would bring us to 43,150, at which time the market has to decide between higher or more consolidation. So then this is what we got. So we back tested from the 100-day because we were down here at the bottom of this candle on the 22nd last week. Is that right? Yeah, last Monday was the 22nd. Oh, man. There we go. So we're at the bottom of this candle, just above the 100-day. And now we have turned all the way around, tested the 50-day, broke it this morning, broke this 43,150 that I talked about. And that's where it's at. Let's check a live chart. Oh, man, this is looking good. So let's bring up those EMAs or the moving averages. And we're pushing up higher here, 43,193. If we close the day above that 50-day moving average, I think that's going to be extremely, extremely bullish. Okay, let's get back into it. Price is challenging the 50-day MA at the time of writing. This is the time to make a decision. If price fails to break and hold above the 50-day, we could roll over and test the lows. However, RSI and MACD are both turning bullish. Technically, if we close above the 50-day, there is a good risk-reward ratio for going long with a stop loss just under the 50-day. If price is rejected, new lows down to 37,900 roughly are in play. I do not expect a significant sell-off, though. The odds of a big move greatly favors the upside. So here is this one. And you can see RSI is above 50. Moving bullish. MACD is crossing over right as price is breaking the 50-day moving average and threatening to close above it. So this is a very, very bullish stance right here. But if it is rejected, if there is a lot of a lot of sellers that come in at the 50-day moving average right here, and they succeed in pushing price back down below the 50-day moving average, that is a bearish sign and will probably at least test the 100-day again. But anyway, that's what I'm watching at for price. Sources of demand continue to be strong and will only get stronger as price rises. Demand goes down or up with the price of Bitcoin. That's why I was talking about the Veblen good there a minute ago. As Bitcoin rises, we should expect inflows into the ETF to increase. Can you imagine? As price goes up, we should expect the inflows to increase, and maybe not measured in Bitcoin. If price doubles, will the inflows double? Maybe, but definitely measured in dollar terms, we should expect the inflows to go up substantially as the price of Bitcoin is rising, because it is a Veblen good, and demand goes up as price goes up. When we break 49,000, it could be significantly more inflows. Demand out of China is the same thing. Overall, since FTX price appreciation, I'm sorry, I should have put a comma. Overall, since FTX, price appreciation has come via brief, steep appreciation, followed by periods of calm. We should not be surprised if that continues. So let's go back to the chart here and go to the weekly. And I'm going to take the moving averages off and set us up here. Sorry about that. All right. So you can see since the FTX collapsed down here back in November of 2022, price appreciation has come in these big moonshot weekly candles. Okay. So here in January, then of course in March, we had one in June that didn't succeed in breaking out, came back down. But then here, really 2-3 weeks, maybe 4 weeks since October, those have been the big weeks. And then it's kind of gone sideways, up, sideways. So don't be surprised with that pattern to continue. Huge weekly candles. What was this one? 25% was this one back in March. These two combined were 30%. So we should expect maybe some candles like that. And if we go from here and we go 25%, we're talking 53,000 already. So that's possible in the near term, like a 1 week candle that would be that big. But anyways, okay, let's get back to the report. That's it for price this week. Let's get into mining. So headlines for mining: Swan Bitcoin announces U.S. mining business with 750 Bitcoins mined already. So I guess they've been mining since June or July of last year. So that's roughly 100 Bitcoins a month. That's quite significant hash rate that they already have acquired. But when I read this, I thought back to this disagreement that Matt Odell was having with Corey Clipson just a couple months ago. Perhaps it was due to investment in this stealth mining operation, because Matt Odell was saying, where is this money coming from? Where is it going? We don't know anything about this. Well, if it's for mining, maybe there was maybe it was even mining under a different name in stealth. Uh, who knows? But that could explain at least some of this confusion that Matt Odell was having. Swan is setting itself up in a unique business model for going public. They sell Bitcoin directly to retail, offer wealth management services, and now mine Bitcoin. We'll have to see if that all fits together or if they are spreading themselves a little too thinly. So this is a quote from the article. Swan Bitcoin has expanded into Bitcoin mining, the company announced Thursday. They Swan has been operating a mining arm since July of 2023. That's now coming out of stealth mode. Since July, Swan has mined 750 Bitcoins. That's a lot. 7 mining farms are powered by 160 megawatts of electricity and producing 4.5 exahash of mining power. 3 more will come online in March, increasing the overall hash power to 8 exahash. Our long-term goal is to be about 50% in the US and 50% outside of the US, Clipson said. I think that is for mining specifically, but it could also be for their DCA services that they provide. Swan is working to achieve a public listing within the next 12 months. All right, interesting. Next story here is Bitcoin halving could put miners out of business. Can Riot Marathon weather the storm? Of course, it is halving FUD once again. Oh no, the Bitcoin halving is going to bankrupt all the miners. Be afraid, people. Bitcoin miners are expanding rapidly at current price levels, fully aware of the halving. It is not irrational to expect the Bitcoin price to not just double, which would make them break even, right? If the reward halves, but the price doubles, they break even. But we should expect way more than a double, most likely a quadruple or even more. Also, fees will become more and more a source of revenue for miners going forward. So pretty much, I said this was going to start happening more and more. People were going to FUD Bitcoin more and more. And that's what we're seeing right here. Okay. Let me check and make sure all my volumes are up because I thought I had a sneaky feeling that I wasn't even talking to Telegram. Okay, Bitcoin miner Grid makes NASDAQ debut after SPAC merger. We now have a new a public Bitcoin miner in the US, and their ticker is GRDI. I will be adding that to the Bitcoin Magazine Pro mining dashboard. We have a mining dashboard that has all the different public miners, their stock price, their 30-day performance, a lot of stuff about the network, about the hash rate, miner Bitcoin balances, how much have they sent to exchanges, what else do we have on there? We have all sorts of stuff about the mining industry on the mining dashboard, and that is bmpro.substack.com. But I'll be having to add this to that. Let me pull this story up, actually, if it will. Okay, there we go. It opened. All right. So Bitcoin miner Grid makes NASDAQ debut. They've officially commenced trading on the NASDAQ global market, heralding a new chapter of its journey. Blah, 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 blah. Grid NASDAQ listing comes on the heels of a successful merger with Adit EdTech Acquisition Corp, a special purpose acquisition company, or SPAC. This strategic move underscores Grid's dedication to fortifying its market position and enhancing shareholder value. With the completion of the merger on January 2nd, Grid swiftly transitioned to public trading. All right. So this is brand new. They are an established miner. I believe they might have been traded on another stock exchange, maybe up in Canada or something like that. But now they are listed here in the United States. All right. Back to the report. Let's get into difficulty. So this week, difficulty did not adjust. The most recent is a negative 3.9% negative adjustment, as you can see over here in the far right side of this graph. but it's estimated to rise by 7.5% roughly in 3 days. So hash rate is just blowing out. Let's take a look at the hash rate chart. You can see this dip was the Texas miners, and not just Texas, but we had a cold blast here in the United States where a lot of miners probably turned off some of their machines. I don't know, actually. That's a good question. If only Texas has the agreement with these miners, but I'm sure other power plants have agreements with the grid balancing, the load balancing. And the biggest project is probably just the one that's in Texas. But you can see that big dip here and surge in Bitcoin mining with the difficulty estimated to rise by 7.5%. Okay, let's get on to mempool. Here is the mempool down on the week, chewing through some cheaper transactions. You can see in this section right here, actually, let me bring up a better chart of that. So this is mempool.space. Go to the 3-month chart. And I hope you can see this a little bit better. But in this area, you can see the rainbow of colors. And these are all different fee levels. So this is the cheapest fee down here, the most expensive fee up top. And we do not have that right now. So there is not a lot of urgent demand for Bitcoin transactions right now. People are kind of waiting and seeing. Accumulation is happening or has happened, and now we are waiting for the inevitable move. Back to the report. How about inscriptions? So there's been another spike in inscriptions, and it seems these are coming over the weekend. This most recent one hit over 400,000 on Sunday. On average, inscriptions have been lower in January than previous months, though. Let's take a look at this. See, this dark brown line is downward sloping. So I don't know exactly what that moving average is, but let's say it's a 30-day moving average, is declining with these spikes. You can see the most recent one going up over 400,000 daily transactions that had inscriptions on them. Or 400,000, I guess, inscriptions, not 400,000 transactions. Okay. What are the fees being paid by these guys that are inscribing? Maxed out back here in, when would that be? Middle of December, towards Christmas time. Maybe someone was inscribing some ordinals for a Christmas present. No, I'm kidding. But that was the high fee time back then, 30 million spent in a week. And now you can see they're getting substantially cheaper. There is just more space in the mempool for these things. And so they're decreasing in number on average, but they're not, there are spikes, but it's not really affecting price. And the fees are negligible at this time. I mean, there's 4 million. These scammers and memers, they can support $4 million a week for a significant period of time. They can't support 30. But they can support 4, at least for the time being. There is enough degens out there to support $4 million per week. But it's not, when it spikes like this, the entire ecosystem of degens can't support that, because that's real world cost. You have to pay the fees to the miners. That's real world cost. You don't have that same stuff over in the altcoin side, right? Like Bitcoin fees keep you honest on your degen activities. You don't have that over there in the altcoin side, so that you can wrap all this extraordinary claims, scammy language. You can wrap it all up with near zero fees, because you don't have to pay the piper. On Bitcoin, you have to actually pay the piper. Your economic activity has to be valuable, or else you're not going to be able to afford the fees. So right now at this stage in the game, I think they can afford, $4 or $5 million a week in degen profits to pay for these ordinals and inscriptions. But as soon as we see prices spiking like that, they just can't support themselves. So anyway, very interesting. And that's it for this one, guys. Let me check the comments here real quick. Dex Invictus back with us. What's up? All right, let's see if there's any comments here in Telegram. Cut off your nose and spite your face. Thanks, Yoking. Yep, that's exactly right. Uh, what was I saying that in regards to? Oh, the was that the Texas thing? They can't. They just game theoretically. I don't think the Biden administration has a move here that isn't going to backfire completely. All right, let's see. Rand. The Great Taking, Rand. I have heard of it. Let me see. I've heard of it, but I'm not sure. Is it older? Is it like 20 years old? Because if it is 20 years old, I might have seen it, and I just can't remember now. Rob, okay. Yeah, well, I can't just you're saying I'm sharing my whole screen. Yeah, sharing my whole back end there with you guys, but um, that's kind of how I have to do it right now. It's that or nothing. The SEC supposedly changing definitions regarding stocks, bonds, putting securitized investors in front of us plebs. I have not read that. Of course, all different asset classes have different um, levels. Like bondholders are more important than stocks. You know, if you hold shares, and also, so for if a company goes under the bond and they liquidate their assets, the bondholders will get paid first, and there's probably different levels within those bondholders that will get paid, maybe domestic than foreign. I'm not sure. And then you have different levels of shares. Obviously, you have like preferred stock and common stock, and so each one of those have different things. So you're saying that the SEC is supposedly changing the definitions regarding stocks and bonds, putting securitized investors in front of it. I haven't seen that. I would read. I'd love to read any link that you have there, Rand. But all right. So that's all those comments. Let me double check one more time. Nope, nothing from YouTube and Rumble. But guys, if you're watching on YouTube, Rumble later, like, comment, subscribe. I appreciate that. Share, share, share. Trying to get my name out there and get the views up and all of that. And if you're not subscribed over on bitcoinandmarkets.com, you can do that. You can also sign up a friend or family member. They can always unsubscribe and it's free. So it's, yes, it is kind of spammy, but you care about your friends and family, and you care about getting them good information about Bitcoin that they can count on. So anyway, appreciate all your guys' support, and I'll see you on the next one.